Hello, good morning and welcome to today's morning report with me, Rich Perry, market analyst at Handtech Markets on Monday the 10th of November. These European markets have started reasonably mixed. That's sort of continuing this non-farm payrolls related sort of tepid market reaction that we've seen ever since Friday afternoon with that payrolls number that came in slightly below expectations and sort of just took a bit of the edge off the markets really. They're sort of looking for a bit of direction and still not really found it. Over the weekend we had the Chinese inflation data, which was reasonably mixed again. 1.6% on Chinese inflation on the month, which was again underneath that key low that we see back in 2012. So it's almost at a 5-year low. Sort of 2010 was the last time we saw this. January it was at 1.5%. So it's still bumping along the bottom and still gives the impression that we could still have some further monetary easing from the People's Bank of China perhaps. But it still doesn't really suggest that the Chinese economic recovery or economic engine is still moving on strongly. It sort of just puts a few doubts in the mind with regards to that. And that's sort of taken a bit of the edge off these Asian markets, fairly mixed overnight. The Asian markets, certainly the Nikkei, for example, was down 0.6%, and that was following on from the stronger yen that we've had ever since that payrolls report as well. So it's sort of all tying in together there. But the European market's fairly flat, nothing really major going on, just slight gains, but just bumping on the DAX between positive and negative, but slightly more upside on the FTSE scene there, 0.3%. That we've got. In terms of the currency markets, as I said, the dollar is under a little bit of a corrective phase since that payrolls report, and that sort of continued into today. The euro and sterling are both about 0.2% higher against the dollar, and the yen also is strengthening and pulling dollar yen lower back towards 114. So that is having this impact on the dollar index. And a bit of sentiment reversal that we've seen. The dollar has been incredibly strong in recent weeks, and certainly looks like it's slightly correcting, but it is having an impact on these Forex trades. But certainly I think it could just be a near-term phenomena. In terms of economic data that we've got today, nothing really majorly going on. In fact, the only real impact that the markets could be seeing is the Fed member Eric Rosengren, who's a habitual dove on the committee, but he's not a non-voter, and he's speaking tonight. So that could have an impact on currency markets certainly, but it is after the US close, so it's not really going to have much of an impact there. And also we've got a US holiday tomorrow with Veterans Day. So it could be a fairly quiet session once more. Volatility continues to fall away. That's the VIX index continues to fall back to 6 week lows on that VIX index. So that suggests the markets are fairly calm. In terms of my chart of the day today, I'm looking at the Kiwi dollar, and the reason I've chosen this is because we had this move last week back towards that key level at 76.82. Now I'll zoom out to get reason why that's the key level. It's huge lows that we saw back from June 2013 that just held on last week. Didn't see a close below that level, and we've rebounded back towards this big downtrend today. Now the move that we've seen in the last couple of days on the back of this weaker dollar has been fairly strong, you would argue, but it's still not quite yet broken out above that reaction high at 78.42. But the key move is certainly that 78.80, and it's still in this sequence of lower highs. And for now, it looks like it's just coming back towards this downtrend, and could well be seen as another chance to sell. Momentum indicators pretty much across the board, weak configuration, nothing really in terms of recovery. Just seems to be that any rallies are being sold into. MACD lines negative territory. Stochastics have slightly turned up, but I think that's more that it'll just be seen as a bumping along the bottom rather than rather than a buy signal on that chart. Anyway, I wish you good luck in your trading on the Kiwi today. As I said, further pressure I believe that will be seen in due course on that 76.82 level, and I will speak to you later. Thank you.